Hey everyone, Ben here. The real estate market has seen a huge surge in demand this past year as the global lockdown forced many people to stay at home. Now this of course caused a variety of issues. People realised the importance of having a nice property, even one with say outdoor space such as a garden or maybe even a balcony. The property market was even affected by people's relationships because many people were locked down with their partner 24/7. They realised that they actually weren't that compatible and thus many people broke up and decided to get a place of their own.
It might be time for you to think about moving out.
Why would I'm not moving anywhere. And Gary, just please turn the volume down.
And that's not all. Even young people decided that the key to their own sanity was to actually move out from their parents and live independently. Either way, all these factors had a cumulative effect of increasing real estate prices in many countries, from the UK to the US and around the globe. So the real question is, which investment is better, stocks or real estate? And should you be investing into property right now? Now, I will be using the words property and real estate interchangeably in this video. In the US, you guys tend to use more real estate. In the UK, we tend to use the word property quite a lot. So I'll use these words interchangeably. I'll be pitting together these two asset classes across a variety of different factors to help us make the best decision as investors.
Let's get ready to rumble!
But before we dive into that, if you're new around here, why not consider joining the investing family by hitting that subscribe button and turning that notification bell on. And if you do find any value in this video at all, please give it a big thumbs up. That helps out tremendously with the channel. That being said, let's dive in. So kicking things off with factor number one is upfront capital. So property or real estate requires a massive amount of upfront capital to get started. For example, for investment properties, this can be at least 25% of the total cost of the property. And for initial properties for somebody's first home, this could at least be 10% of the property's value. For example, in the UK, looking at the house prices, you still need to put down that massive down payment. So this could be anywhere between £30,000 and £60,000 or even dollars. However, when you invest into stocks, you can start investing from as little as £1, $1, €1, wherever that may be. There is really no minimum amount you need to invest to get started in the stock market.
Stocks only go up. Stocks only go up.
So that's 1 point for stock investing. However, don't rule out property just yet, as we go on to factor number two, which is leverage or debt. So there's two types of debt. There's good debt and bad debt. With property investments, you can actually take on good debt to enhance your returns. This is the magic of using leverage, or gearing as it's sometimes known in the UK. This means you can actually purchase a much more expensive asset than you can actually afford.
Excellent.
For example, for a buy-to-let property, you can borrow up to 75% of the property's value from the bank. Yes, with stocks you can use margin, but this is still not the same as using true leverage and getting a real loan from a bank. So I'll give that second point to property. The third point is liquidity. Now this is something I find is really important when investing into property or stocks. So property investments are just not that liquid. So if you want to buy or sell the property very fast, you just can't do it. So let's say there's some sort of emergency. It's very difficult to actually sell the property very fast. Yes, you can put it into an auction, but then you can be usually selling it for less than you would if you sold it normally on the open market. And even when you buy a property, from actually signing the deal to actually having the keys in your hand can take anywhere between 4 months and 6 months to actually buy the property. Now the reason for this is there's so many different parties involved. You've got the solicitors or lawyers on both sides of the transaction, on the seller side, on the buyer side. You've got the real estate agent. You've got the bank who needs to approve a mortgage on that property. And most of the time you've even got a mortgage broker as well. So you've got all these different people involved in one single transaction. Whereas in the stock market and stocks, you can buy and sell stocks instantly with no hassle.
I know, sell high, that's my motto. I may just quit my job at the power plant and become a full-time stock market guy.
I could wake up one day and sell all my stocks with no issue, and I could take that capital and use that in another investment if I saw an opportunity. So with real estate investing, you do have to be aware of that. You can lose out on opportunity cost if you do see other investments, or even diversifying your risk can take a lot longer to do. So I will give that point to stocks.
The show goes on!
On to point number 4 is return on investment. Now this one is a really tricky one to analyze because yes, the average return of the stock market if you invest into an index fund is between 8 and 10% per year. But if you invest into individual stocks, you can achieve incredible returns. For example, a variety of my positions in my portfolio have achieved 300 to 400% this year on those single positions. And yes, I wasn't invested fully into that single position because I have a diversified portfolio, but it does show that there can be massive upside with stock investing. But don't rule out real estate, because generally you can achieve 6 to 10% on rental income and then another 10% on capital gains. This gives you a cumulative return on investment of around 20% per year, which is possible with property investing. And this also comes with minimal downside risk. Yes, you could have vacant periods if you have a rental property, and also bills to pay and overheads for the property and also maintenance fees. But generally, if you invest into a stable market, you can expect pretty stable returns. So really, I will give a point each to stock investing and property investing on return on investment.
Let's get ready to rumble!
On to point number 5 is adding value. Now, this is something real estate investing has a real advantage for. So you can actually add value to that investment. You can refurb the interior, you can refurb the outside, you can build an extension, you can build an actual property on some land that you've purchased. This is a massive advantage for property over stock investing. This means you can have 2 houses on the same street which could fetch very different prices because one person has saw a specific angle on that property. They've decided to do some sort of refurbishment. So to me, that's a clear win for real estate investing. I'll give the point to that asset class. On to point number 6, and that is fees and taxes. Now, I'm sure many of you guys will be aware, if you try to purchase and invest into a property, you'll find there's a vast amount of fees and taxes to pay. And this is, as I mentioned previously, there's so many different parties involved. You've got solicitors or lawyers on the buyer side, on the seller side, you've got mortgage brokers, you've got estate agents, you've got all these different parties involved, and that's why there's so many fees to pay. And then you've also got taxes. For example, in the UK, you have to pay stamp duty, land tax, and also capital gains if you sell the property at a later date, and income tax on your rental income. For example, if we just concentrate on stamp duty, that can cost anywhere between 2 and 5% of the market value of the property. And property investing can also be less tax efficient in many countries. For example, in the UK government seems hell-bent on actually reducing the returns landlords can actually make. For example, they recently brought out a regulation called Section 24, which meant that landlords could not offset their mortgage payments as an expense, which really does defy the laws of normal business. For example, in a normal business structure, you have revenue or turnover, then you minus your business expenses, then you pay tax on the profit. However, this Section 24 regulation actually means you pay tax on the expense, which is completely crazy. And I actually have many friends who have vast investment portfolios of 20, 30, 40 properties, and it's actually made their entire business model not work at all. So they've had to actually sell off all their properties. Now, this is where I go on to stock investing, because with stock investing, it's an extremely tax efficient way to invest. So for example, in the UK, you can invest in what's called an ISA. So each UK citizen gets an ISA allowance of £20,000 per year. Whereas if you invest using an ISA, you don't have to pay any taxes at all. No capital gains or no other taxes.
The show goes on!
Now, I did a full video on this, so if you want to find out more about that, I'll leave that in the description below. The US also has similar tax-efficient wrappers, such as the Roth IRA. And also, when you do invest into stocks in general, you can invest for free. So that means 0 fees. A lot of these apps, they're free to download, free to sign up, and they even give you a free share when you do sign up. Now, I've got plenty of links for popular platforms I use. I'll leave a link for Etoro in the description below. That's a very popular platform, free to use, free to sign up, and free to trade if you're in the UK. If you're in the US, check out the link I have in the description below for Webull, where you can get up to 4 free stocks when you sign up. Right, so on to point number 8, and we have diversification. So diversifying your investments. Now, you can diversify with property, but it's a lot more hassle. For example, you could have properties in different countries, you could have properties in different cities, different areas, and that does diversify your portfolio. However, with stocks, diversification is a hell of a lot easier. For example, if you want to diversify your portfolio, for example, you can invest into an index fund like the Vanguard S&P 500 ETF, which tracks the top 500 best performing and largest companies in the USA. This fund contains everything from Apple to Google to Amazon and even Tesla now. Now that instant diversification is just something you can't get in property. So I will give that point to stock investing, because generally I do say if you are investing into property, you should know the area really well. So this could mean investing into an area that's local to you, or just one that you know really well. And what tends to happen when you're investing into property is you know an area really well, you know the best apartments, you know the best houses, you know the best deals, and thus you tend to invest a lot in that area. For example, I have a lot of friends, they have many houses on the same street, and that is great for simplicity, and you know the area, you know the rental rates, you know the agents, etc. to look after the property. But in terms of diversification, if there's a fire on that street or the property market in that area does get hit, then that can really add excess risk to your portfolio. On to category number 9, and that is cash flow. So cash flow is a really interesting one. So with rental properties, you can achieve consistent cash flow each and every month, and that can help you guys to become financially free. Now that is a massive advantage over many other types of investing. Yes, you can invest into stocks also, which pay dividends, or invest into what are called real estate investment trusts. So this is basically like you're getting the best of both worlds. So real estate investment trust is a type of stock which basically the company owns a hell of a lot of rental properties, and you actually get paid a consistent amount from the rentals that those properties produce. Now these could be commercial properties, these could be big warehouses, office buildings, and many, many more. So REITs do offer a little bit of a balance and best of both worlds, but in general, I will give the point for cash flow to rental property. And finally, point number 10 is short selling. So an interesting and unique advantage of stock investing is you can actually sell a stock short. So this means if you think a certain market or a certain company is going to decline, you can actually sell that stock short and actually make profits when a market goes down as well as when it goes up. So I will give that point to stock investing.
Stocks only go up. Stocks only go up.
Okay, so what are my final thoughts on stock investing versus property investing? Well, personally, I think they're both great assets to invest into, and I think a diversified portfolio across both asset classes is the smart thing to do, but you just have to be aware of the major differences and factors with each asset class. Like I have some friends who are fully invested into property, they have 10, 15, 20 different properties and they have no investments in stocks, and I just think that's completely crazy because they're missing out on so many opportunities. And even if you're waiting for a property to invest into, you can easily invest into the stock market, keep your funds there, let that money keep compounding, working for you while you sleep. And then when you find an investment deal, because that's one negative of property investing, it takes such a long time to actually find a great deal. This could be 6 months, this could be 1 year to actually find and purchase property and find this great deal. That takes such a long time. In that time, you could have your money in the stock market working for you. And because stocks are so liquid, you could withdraw that out and actually purchase the property, even with the capital gains from the actual stock investing. But I'd love to hear your thoughts. What do you think of investing into property or real estate and investing into stocks? I'd love to hear your thoughts on both asset classes, so please do comment those in the description below. If you guys did find some value in this video, please give it a big thumbs up. That helps out tremendously with the YouTube AI. If you're new around here and you still haven't subscribed, what are you waiting for? Feel free to join the investing family by hitting that subscribe button and turning that notification bell on. If you guys want to talk to me directly about your own investing situation, whether that be investing into real estate, investing into stocks, access exactly which stocks I'm buying, which stocks I'm selling, and my entire investment portfolio, then check out that first link in the description below for the VIP membership group. The group's the price of a coffee, and the amount of value you get is absolutely incredible. You join a like-minded community of investors, of people who are moving towards a successful point in their lives. We've got people in there who've got a $200 portfolio, a £1,000 portfolio, to people with $5 million, £5 million portfolios. So it's a real mix of people and a real interesting group to be a part of. So if you're interested in that, check out that first link in the description below and you'll be very welcome there. And with that being said, I hope you guys have a tremendous day and I'll see you in my next video. Invest safe.